In this session, we will learn how to calculate beta of stock in Excel. Let's first understand. What is beta? Beta is the sensitivity of stock with respect to market, as it measures volatility of stock returns, relative to the entire market. That is, if the market move up or down, then how should the stock should move? And to determine this, we have beta, which we will calculate shortly. The value of beta can be equal to 1, greater than 1, between 0 and 1, equal to 0 and less than 0, that is negative. Let's interpret beta based on its value. Stock beta equal to 1 means stock is exactly as volatile as the market. That is, if the stock market, like the Nasdaq, which represent market, rises up by 1%, the stock price will also move up by 1%. If the stock market moves down by 1%, the stock price will also move down by 1%. Stock beta greater than 1 means stock is more volatile than the market. That is, if the market moves up by 1%, the stock price will move up by more than 1%. However, if the stock market moves down by 1%, the stock price will move down by more than 1%. Stock beta between 0 and 1 means stock is less volatile than the market. That is, if the stock market move up by 1%, then the stock will increase but less than 1%. Stock beta equals to 0 means stock is uncorrelated to the market. Stock beta less than 0 means stock is negatively correlated to the market. Here, if the market is going down, then the stock will go up and vice versa. Now, how to calculate the beta? Let's prepare the data to calculate. We can use 2 years of daily stock prices like we are using here, or 5 years monthly, or something similar data points. And let's say we need to find beta of Microsoft stock. So we will requiring 2 years of daily stock prices of Microsoft. And the Microsoft is listed on Nasdaq, which is the market. So we will take 2 years of Nasdaq closing price. Now, using this data, we need to calculate daily returns of stock and market. As we have to use daily returns in calculation of beta, which is given by equal to today price minus previous day price, divided by previous day price. That is final value minus initial value, divide by initial value. And then autofill to fill the same formula for the rest of the cells by clicking at the bottom right of first cell. Similarly, we need to calculate daily returns of market, equal to today value minus previous day value, divided by previous day value, and then autofill to fill the same formula. There are 3 methods to calculate beta. First is slope function in Excel. Second is statistics formula of covariance and variance. And the third is regression. First method, slope function. Before describing the slope function to calculate beta, let's see why we are using slope function. To know that, let's see where beta is used. Beta is a component of the capital asset pricing model, CAPM, which is used to calculate the cost of equity valuations. And the formula for cost of equity is given by KE equals RF plus beta into RM minus RF, where RF is the risk-free rate, RM is market return, and it is linear equation of straight line. And we know equation of straight line is y equals c plus m, x, where c is constant and m is slope. Comparing these two equations, we can see that beta is m, which is the slope of line. And that's why we can use slope function to get beta equals slope y values, x values. Y value represents stock, so we have use stock returns. X values represent market, so we use market returns. So we can use slope function. First select the stock returns for entire data, put the cursor at the first stock returns and press Ctrl plus Shift plus down arrow to select the stock returns for the entire data, then comma, and next similarly, we have to select the market returns and close the bracket and press enter, and this beta, which is equal to minus 0.4172. And here our beta is negative. So as discussed, market and stock are moving in opposite direction. Let's check this with our data. And let's see the recent closing prices. And we can see here when market is moving down, stock is going up. And when market is up, stock is moving down. Second method is variance covariance formula. And beta is given by covariance of stock returns and market returns divided by variance of market returns. So to calculate covariance, we have formula in Excel equals covariance.p, and it will ask array 1, array 2. And we can select either a stock return or market as array 1, and the other as array 2. To calculate the covariance between stock returns and market returns. Similarly for variance, we have formula equals variance.p. Here we need to calculate variance of market. So select the market returns only. And beta is covariance divided by variance. And the value of beta is equal to minus 0.4172. Third method is regression using data analysis, which is available in Data tab in extreme right side. But if you haven't used this previously, it won't be visible, as first you need to enable this, as this is available as add-in. To enable the add-in, go to File, and under File, go to Options, then Add-ins, and then Manage Excel Add-in. Click on Go. You need to enable Analysis Tool Pack. Check the box and click OK. Now you will see Data Analysis in the extreme right of Data tab. For regression, click on Data Analysis. It will open Data Analysis dialog box. Here, as you can see, we can do lot of statistics test. And use the scroll bar to find the regression. And click on OK, and it will open regression dialog box. Here, like the slope function, it asks for y and x range, and we know y ranges are stock returns, so select the stock returns. Similarly, x ranges are market returns, so select the market returns. Rest in fine. Output location means, where do you want the output? In the same sheet, then give the cell location where to start, or you can choose output in new worksheet or altogether in new workbook. Let's give the cell location to start the regression output from here. And the regression gives lot of information, but let's limit ourselves to beta here. But where is beta? Come back to same equation of cost of equity KE equals RF plus beta into RM minus RF. And we know equation of straight line y equals C plus mx. Again we can see the beta is m. That is coefficient of x. So beta is coefficient of x, and this is x variable. And this is coefficient column. So this is our beta equal to minus 0.4172. We will learn more of finance topics. See you in my next video.